Welcome back. In the first video, we learned the basic concepts of accounting, including the accounting equation and the 5 major account types. Now it's time to see those concepts in action by following a simple business example. Meet Luna, an aspiring entrepreneur who wants to start her own lemonade stand. Like any new business, Luna needs money to get started. She decides to invest $500 of her own savings into the business. This investment becomes the first financial transaction of the company and marks the beginning of its accounting records. Every business, whether it's a small lemonade stand or a large corporation, starts with transactions like this. To record business transactions accurately, accountants use a method called double entry accounting. Every transaction affects at least 2 accounts. This is done using debits and credits. For assets and expenses, a debit increases the account while a credit decreases it. For liabilities, equity and revenue, it's the opposite. A credit increases the account and a debit decreases it. The most important rule is that every transaction must have equal total debits and total credits. This keeps the accounting equation balanced and ensures the books remain accurate. Let's record Luna's first transaction. She contributes $500 in cash to start her business. Since cash is an asset, the cash account increases by $500, so we record a debit to cash. At the same time, the owner's equity account also increases by $500, so we record a credit to owner's equity. Notice that the total debits equal the total credits. The accounting equation remains perfectly balanced. Once transactions are recorded in the journal, they're transferred to the general ledger. The ledger organizes transactions by account, allowing businesses to track balances over time. From the ledger, accountants prepare an unadjusted trial balance, which verifies that total debits and total credits are still equal before making any adjustments. This step helps identify errors early and prepares the business for financial reporting. We've now learned how businesses record transactions using the double entry accounting system and organize them in the general ledger. In the next video, we'll explore different accounting methods, make adjusting entries, and see how financial statements are created from these records. See you in the next lesson.